Good morning and welcome to GrainTV for November 29th, 2011. I'm Brock Shimbano and to my right is Logan Burgess. Logan, it looks like the bulls came back from Thanksgiving break full of turkey and ready to push this market higher. They're getting some support from a weaker dollar and strong retail sales from Black Friday and from Cyber Monday. We saw in the overnight, corn was actually up 3/4, soybeans were up 4 1/4, and wheat was up 2 3/4 to 4 1/2. Do you think this will continue today?
Yeah, well, I mean, it looks like at the open today, we are seeing a little bit of higher trading. Yesterday was an update, but it really wasn't a big surprise. You know, we saw quite persistent selling throughout the week last week. We saw corn become technically oversold, and, you know, it was on relatively light volume last week. We had a holiday, Thanksgiving Day holiday, and so now we're seeing some volume come back into the market, so it's not a surprise that we're seeing a little bit of an uptick here. You know, with that in mind, we're really putting the 2011 crop to bed here. It's time to start thinking about planting intentions for the 2012 crop. I know you did a little bit of research earlier today into things that farmers need to be thinking about when making a decision between corn and soybeans. Well, what are you seeing over there?
Yeah, basically I want to take a look at the revenue potential for corn and soybeans for producers out there. Each one of you producers need to run these sort of scenarios in your own operation to get an idea of what you're looking at for next year. But for us, we just did a very simple scenario outlook. Basically, we took the national average for corn and soybeans yields. Corn is at 146.7, beans is at 41.3, and we pegged that to yesterday's close. Corn closed at 591, soybeans at 1121. Using these numbers, we came up with revenue potential for corn at $867 an acre and soybeans at $463 per acre. So right there, with these simple numbers that we used, we have a huge potential for revenue in corn compared to beans. What does this mean for producers? Obviously, you're going to have to run your own numbers because there's going to be different input costs involved, and your basis levels and cash prices are also going to be different across the board. But I think looking ahead, producers have to be looking at planting a lot of corn this year.
Yeah, you know, I totally agree with you there, and you know, corn is quite a bit more resource intensive on the input cost, but we are looking here strictly from a revenue standpoint, and to make corn and soybeans be comparable on the same level, we need to see $13.40 beans and $3.70 per bushel corn in Chicago. You know, I don't think we're going to be seeing that anytime soon.
No, I certainly don't think so either. We're going to take a quick commercial break, and we're going to actually jump into these numbers a little bit more when we come back. Welcome back to the Tuesday edition of GrainTV. Let's go on the board with Logan Burgess.
Yeah, Brock, in Chicago this morning we're seeing corn up 5, soybeans up 10, and wheat making up some ground here too. Chicago wheat up 11, Kansas City wheat up 8. And you know, as you said earlier, it's been helped out by a weaker dollar index. We talked about it last week to expect a little bit of resistance here off of the 80 level in the dollar index. We see it right now trading down lower at 79.53. You know, and we also see, with respect to the ratio that you were talking about earlier, we see soybeans actually making up some ground today. I know that you looked at it from a historical standpoint where we have been at with regards to this ratio. So why don't you take us through some of the numbers that we're seeing over there?
Yeah, basically what I wanted to do is take a look at what the futures markets are indicating for going forward for planting for corn and soybeans. What I looked at was the front month futures, and I basically compared corn to soybeans from January of this year all the way up to present, yesterday's close. At the beginning of the year, we were at about 44% of corn's value compared to beans. So if beans was at $1, corn would be 44 cents. We hit a high of 57%, and right now we're currently at about 53.5%. So clearly there is potential in the market for gains in corn compared to beans. We've seen a strong uptrend going across time. But one thing I would like to notice that there has been a decrease in the volatility from the beginning of the year to the latter half of this year.
Yeah, Brock. Earlier this morning, we actually ran a little bit of a few correlation coefficients between corn and soybean with respect to price. And what we saw was that with respect to this chart, between January and June, we saw that corn and soybean prices were they were quite substantially uncorrelated. The correlation coefficient was near 0. Moving fast forward here, July to yesterday, we've seen that now approach 1. That means that corn and soybean prices are starting to move in lockstep. What does all this statistical mumble jumble mean to a producer out there? It means that if corn and soybean prices remain highly correlated moving into planting, this ratio should be preserved, and we should see corn maintain the competitive advantage with respect to revenue that producers can receive from an acre of corn.
Yeah, I'm right there with you, Logan. I think the potential is for this to stay intact. Fundamentals for corn right now, we have pretty tight stocks. Beans, on the other hand, their exports are lagging far behind what the USDA was projecting for this year, and we have a large South American crop coming online here in the next few months.
Yeah. I agree with the fundamentals there, but also it seems like market consensus right now is also that beans are going to be going lower, narrowing that gap and making soybeans relatively even less competitive. Take a look here at the Commitment of Traders report that we saw come out yesterday. It typically comes out on Friday, but it was delayed a few days due to the Thanksgiving holiday. And for the first time in a long time, we saw managed money become net short soybeans. As you said, the fundamental or the demand scenario right now for soybeans really isn't looking that positive, and it seems like we're having a convergence of market consensus here. The market's looking for soybeans to go lower too.
Yeah, it's going to keep this ratio intact, and we're looking for a lot of corn to be planted next year. Some early estimates are 94 million to 95 million acres, and I think we're going to be in that area.
Yeah, well, with regards to the acreage battle that will be ensuing this spring, we'll keep you posted here on GrainTV. That wraps up the Tuesday edition of our show. Follow us on Facebook, follow us on Twitter, or give us a call here at the office to take a demo of the Fire Tip platform. Have a great rest of your Tuesday.